Good morning and welcome to the David and David on Real Estate podcast. David Korman, really excited for 2025. We are in episode number 152, and it's really good to see you in the New Year's, and it's really good to be one-on-one and to get back into the saddle and start doing these again.
Yeah, happy New Year to you and all the best in 2025. So number 152 and number 2025. So I guess we start with all the numbers.
We start with all the numbers, but 2024 was a tough year for many people, David, and I feel that 2025 has to improve. I'm gonna look at this as a glass being half full, not half empty. But there's a lot of things happening and a lot of moving parts, and I'm really anxious to get into some of those with you and to have a discussion because I think a lot of listeners are looking at the market and looking at their 2024 numbers, looking at what happened in 2024, and really wondering what's going to happen in 2025 and where the market's going, and what are some of the um, contributing factors that are going to make 2025 the year that it's going to be. So I'm really looking to having this discussion.
Yeah, well, I bet if we look back at the episode we did a year ago, like where were we then? I think we felt the real estate market was in a bit of a holding pattern. A lot of it at that time was due to the interest rates. Like the rates had gone up, and I think we felt, and the experts and guests that we had on, the collective wisdom seemed to be that people were sort of in a holding pattern, waiting because they weren't comfortable. They couldn't afford the new high interest rates, and they were waiting to see if they were going to come down, back to a level where they could sort of jump back into the market. And but the first half of the year was pretty active. And it was sort of weird because the first half of the year, the rates were still higher, like they had gone up. And it was really the second half of the year, the rates really started coming down. Like there were rate decreases, but they're small. And then people said, okay, it's coming down. So we're not going to jump in the market yet. Let's wait another couple months because maybe it'll come down again. And I think that sort of hurt the market to some extent. I think people were saying, okay, well, this keeps coming down. Let's wait longer because it's going to come down. Maybe it's going to go back to 2%, but there was no chance of that. Then it actually did come down in the fall, but the fall of the market was terrible. So I'm not sure how you explain that.
It's a good question, David. So at the time when we recorded our podcast in January 2024, the benchmark rate was 5%. It was the height. Um, and you're right, the market was in a holding pattern. There were still transactions happening. In fact, I think there were more transactions happening than there are now. But I think what happened was, time is the biggest sort of differentiating factor, right? The fact that rates were high and they were held high for, I think the first interest rate adjustment was in June of last year, if I'm not mistaken. Yeah, June 5th of 2024 was the first adjustment where we had a 25 basis point decrease. And I think the market looked at that decrease. Everybody sort of anticipated that it's going to be coming because the news of inflation going down, people were really monitoring that very closely. So when the first decrease happened, it was just 25 basis points. I think the market sort of looked at it and said, you know what, it's not enough. It's
Right.
not enough. We're in a high interest rate environment for a really long time. I think a lot of people had variable mortgage. I think a lot of savings were depleted to sort of sustain those higher mortgage payment and those higher debt levels. And I think when the 25% basis point decrease happened in June, um, it just wasn't enough relief. And the saving levels were already depleted for most Canadians. So they sort of looked at it and they said, you know what, it's below our expectations and it wasn't enough to really move the market. And the next interest rate adjustment happened on July 24th, which was again 20 basis point, 25 basis points. So again, a very small, minute decrease. to put this into perspective, I think for every $100,000 of a mortgage payment, I think it's, 60, $70 reduction in your monthly payment. So it's not moving the needle all that much. And then again on September 4th, we saw another 25% basis point. So very cautious. And then in October, when there was clear news that the market just isn't really reacting to these interest rate adjustments as well as it should, that's when the Bank of Canada came in and did a 50 basis point reduction. And then recently, December 11th, another 50 basis point reduction. So we're down to 3.25 as the target rate right now from the 5% high that we had last January.
Yeah, so you can't go backwards, but you wonder what would have happened if the Bank of Canada would have, like collectively during the year, from June to December, a 6 month, 7 month period, it was reduced by, what does that add up to? Like
Let's see here.
two and a quarter,
No, it's
two and a half,
175.
175 in total?
Yes.
Okay. What would have happened if in June they just lowered it 175?
I don't know. Hindsight is always 2020. It's always
Right.
easy to, go back, look at all the economic data, and we have the benefit of knowing how the market's going to react. Even though all the Canadians knew that interest rates are coming down, nobody really knew how the market's going to react. It's sort of like, okay, let's make a small adjustment and then wait and see before we sort of make another adjustment. The whole idea here, David, is we don't want to spin back into a loop where inflation goes out of control again, and the Bank of Canada is now rushing to make other adjustments to sort of, keep inflation in line. Right? That's the gold standard, is to keep inflation low in a low inflation environment. That's really what separates the first world economies from all the other economies out there. And with everything that's been sort of going on, I you know, I think the Bank of Canada did the best that they sort of could, given all the information at the time, and making sure that we don't relapse and inflation doesn't go back up, which hasn't happened so far, which, points, everything's pointing that we're on the right track and we're sort of where we should be.
Right. So, that's economic responsibility, I think, by the bank. Okay. I think they're probably doing I'm not saying they should have done it at 1.75, but the effect was, because there was a signal that rates are going to come down for a certain segment of people. Well, let's wait and see how far down they go. Okay. Because obviously, you said, when there was 25 basis points, you do the math, it's not enough to move the needle. People that were interested in buying, and now it's 1.75, that might be enough to move the needle. But some of those people say, well, you know what? That was December. Maybe, it's winter anyways. Let's wait and see what they do in February. Maybe they move it down again. So, for some reason, it didn't stimulate the real estate market. It was probably good for inflationary purposes and other things, but it didn't somehow stimulate the real estate market, because the market was really quiet in the last quarter of 2024, right?
It was. And, David, I think a lot of that has to do with the media and with consumer confidence, right? And affordability. I mean, those are the three biggest things. It's affordability, consumer confidence, probably plays the biggest role, right? And the media has been really loud about negativity in the real estate market. I mean, any sort of newspaper article, any blog, any sort of media communication that's coming out of there is talking about interest rates, is talking about, a decline in transactional volume, right? My question is always like, what are we comparing? Are we comparing the height of the market to what's going on today? Then of course it's easy to take those numbers and spin that news and say, hey, we're in a decline of 32%, right? In terms of transaction volume. But what are we really comparing? What's the basis of our comparison point? And it's really easy to take the data and to sort of spin that data and come up with a scenario that paints doom and gloom on our horizon.
Yeah, I think you've analyzed it absolutely correctly, because the hardest thing to really figure out is, what is a normal market? Like, no matter where we are, we could never recognize, like, oh, we're now in a normal market, right? We always think it should be something else. and maybe we're in reality that we're in the normal market in maybe 2024 was a normal market. Maybe that was normal volumes of real estate. And what we experienced in the years leading up to it were more the aberration, for various factors. We had the COVID years, and then we had the post-COVID years. There's always a whole bunch of factors that influence the market. And we're also in the GTA bubble, which reacts differently than other real estate markets in North America and in the world for that matter. We just happen to be in a pocket where there's usually more demand here than there is elsewhere, right?
Yeah.
And it's hard to recognize, when are we actually in that normal market? Maybe we're in a normal market, right? And we're just looking for the spring of 2025 for there to be certain factors that are going to push it into a higher market, a more active market.
Yeah. And when we look at the economic indicators, David, the biggest one is CPI inflation. That's the one that, we really need to pay attention to. And the numbers came out for November, and we had a decrease in the rise of inflation. I think it went from 2.1% in October to 1.9% in November, which is, really insignificant. But the
Right.
fact that there's a decrease in CPI, and October went up slightly, right? So we're looking for that trend of decreasing inflation. That's what the Bank of Canada wants to see. That's what's going to give them confidence to look at further rate cuts if that's what needs to happen to stimulate the economy. So even though it was a small decrease, I thought that was a really big indicator that we're moving in the right direction. The last thing we wanted to see is consecutive months of an increase in inflation. So the fact that we had October going up and then November coming down was highly significant. And of course, we're all going to be monitoring the CPI numbers for December. And let me just take a quick look here. I think they come out. Just take a look here. They come out on. They come out. I'm just taking a look here really quickly, but I think they come out next week.
Yeah.
So everybody's going to be really keeping an eye on what those numbers look like, and hopefully we have another flat line where there's not much of an increase.
Right. So, you're looking at this and analyze this as a professional in the industry who's actively looking at it. And at some point, you have to translate that into what's the average consumer out there who's interested in moving, changing where they're living. What makes them comfortable enough to do it? And, I'm not sure if they're all looking at all the specific economic factors, but sometimes it's just a gut feeling they have that they feel secure that they have a job and that their job is going to pay them a certain amount, or there's a real potential for some increase, and they got to figure out what they can afford, right? And it starts, I think, with job security.
It does. You're
And
right. 'Cause
right,
without job security, you really have nothing.
right, because if you know what you can figure out, yeah, we can afford to move from the condo we're in to that first house that we've always wanted based on our current income and our current expenses, but things aren't so great at work, or we're not sure, and maybe there's potential layoffs, and I don't know if I'm going to get that promotion that I thought I was going to get, or that increase, because they're sort of putting a freeze on raises, right? So there's that type of uncertainty holds people back too, right? You have to be comfortable that you're going to be able to afford that house. And unfortunately, like, we've experienced so many people that can't close transactions they've committed to. And, that was something that was definitely up in 2024. People committed to transactions and then can't close them because they ran into either issues because they didn't get that raise or that they thought they were going to get, or someone in their home lost a job, or more often it was they couldn't afford the mortgage that they originally had committed to.
Oh. And what percentage would you say, like, what was the increase of those delinquencies in 2024 versus any other year, David?
Well, it didn't always translate to delinquencies, because sometimes there was workarounds that people were able to do. They had other resources, they scrambled, they borrowed from family or friends, and a lot of them got it closed. But I can tell you, just from closing transactions, in the normal course, if I don't have the exact numbers, but if we're closing 100 real estate transactions, we normally would expect about 95 of them to go pretty smoothly, pretty
Right.
routinely. And 5%, there'll be some issues, that'll come up that make the closing a little more challenging. And a small percentage of that are actually ones, it might be one of those that actually doesn't close, but others, they might need extensions or something like that. But last year, I think it was more like 75 to 80% would close routinely. And there was 20 to 25% where we experienced issues on. And sometimes we worked it out, scrambling last minute, and people were able to close on time. Sometimes we were negotiating and scrambling to negotiate extensions to give them some more time, which always gets expensive. And some were able to comply with the extension terms. And then there was a percentage that didn't close. And in our case, it still wasn't a high percentage because most of the time we found a way to get it done. So, and we're always working hard to do that and, get as much time as we need and scramble and help them find resources to find a way to close, because it's always better to close than not close.
Yeah.
But it
I,
was certainly more
David,
challenging.
I can't emphasize enough how important it is to work with the right professionals in this market to make sure that, when things go routinely, right? But when things go sideways, they go sideways very quickly. And if you have the wrong professional on your side, it becomes a nightmare situation. I'm dealing with a really good client of mine actually that bought a pre-construction condo, and the lawyer that they hired, they didn't follow my advice. They didn't hire Kormans. They hired a different lawyer. And I'm just scratching my head, the advice that they're getting, and they're this close to having the builder pull the deal just because they're not respecting timelines. They're not respecting correspondence from the builder's lawyer, and it's just it's mind-boggling. I think they're in their third extension, and the builder asked them for a further deposit of $7,500, and their lawyer's pushing back, saying, "No, you don't have to do this." And it's just, it's so important to be working with the right professionals that, understand the system, that understand the options that the clients have, and that are really pushing for the transactions to come together and not obstructing the transactions. And, this is why, whenever an agent calls me and says, "Hey, there's an issue," my first question is, "Who's the lawyer?" Like, I want to know who you're working with, what's the team that you've built around the clients, because it's such an integral part of making sure that the transaction closes and that it's really smooth, and everybody works together to get the deal done. I love when clients work with you, law firm, and I know I'm plugging for your services, but I've seen so many situations on the flip side where they go south really quickly, especially in this environment when there's so many moving parts, and it's a little bit tougher to close some of these transactions out there.
Yeah, no, it's definitely challenging. And there's a skill set that you develop on how you deal with a situation when when your client is the one that's defaulting and in trouble. And trying to hide it from the other lawyer isn't the way to do it. You're always better off being upfront. At
100%.
certain times you're writing or giving them information that's without prejudice. Okay, so they can't use it against you. And other times you can let it be with prejudice, but here are the facts. We're trying to do it. And you have to be receptive to the fact that you have to understand, what the builder's trying to do as well. Like, we're not in a market right now where the builder's reaction to someone defaulting or not being able to close on time is they're automatically going to be, great, we're going to keep their deposits, so because they got nobody to sell to. And they may not be able to sell at that price. So that's not their first reaction. They're trying to understand. They want to know, is there a realistic possibility of getting this closed? If I give them 2 days, if I give them 2 weeks, is there a real possibility of this buyer being able to have the resources and come up and close? Because if they can, that's better for the builder, right? They want to get the transaction closed. So maybe the builder says, okay, we'll get certain costs covered, but we know we can't strangle them either. Do they have an ability to put further deposits, put their money where their mouth is? Let's see. Sometimes they do, sometimes they don't, right? So just because they don't doesn't mean that's the end of the story. Sometimes the builder will still work with you. But as a lawyer, we got to go through all that with our clients, trying to understand what's really going on, what they can afford, what they can't afford, and explain their risk. If you throw this money in for a further deposit, are you going to be able to close? Because if not, then maybe it's not a good decision to do it because you'll never see that money again. And it's not worth buying that time if you have no possibility of closing, right? But part of the negotiation is being upfront with the other lawyer involved and trying to get a feel for what's going on in the builder's office. Because if the builder has an ability to flip that unit to somebody else really fast because they happen to have people looking for it, um, you don't have the same leverage at all, right? And
100%.
also, because our firm's been doing this for so long, we have a reputation with the lawyers that we're dealing with that are acting for these builders too. They know we're not bullshitting. They know that we're going to give them the straight goods. We're trying to find a way to get it closed. We're not just trying to say, oh, our client can't close, give us back the deposit money. Like, we're not giving them a fake sob story. We're giving them real information, trying to work with them because it's good for them and it's good for us if we can get it closed. Okay.
100%.
But on the other hand, they're skeptical because they're receiving a lot of absolute bullshit stories from people that just, yeah, you know what, I don't really want to close because the market's not good. And just see if you can get my deposit money back, and make up a story. And they do their homework and they find out that those stories aren't real. And then they're going to hammer you.
Yeah.
Right.
Yeah.
So
So let's talk about 2025 a little bit. Are you anticipating more tougher transactions on the horizon?
I think some of that might quiet down because I think, people are a little, they're getting better advice going into the transactions now. There's been enough of these stories that get circulated and people are not taking that risk. They're not going to sign that contract unless they really know that they've got real financing. So I think some of that is dissipating, and it should be, okay? Because we've been preaching it for a long time. Every webinar that we do, every seminar that we do, every podcast, we're always talking about that. Like, make sure you get, proper, a good mortgage broker that's really covering you on. Like that's, you're talking about getting good legal advice. You need a good mortgage broker that's acting really in your best interest too. That's not just feeding you a bunch of bullshit and really covers you, right? So I think there's less people going into transactions that are taking that risk. I'm not sure if I'm going to be able to close it or what, the what ifs. I think they're covering those a little better. So I think some of that will come down.
Yeah.
And
And
the
I think
fact that the rates are lower,
Yeah,
right?
I was just gonna say that's a big indicator, right? I think a lot of Canadians were anticipating the rates to come lower, and
Mhm.
I'm a entrepreneur and a risk taker, so in September and in August, I think that was a real sweet spot to be able to sort of jump in and acquire properties and really get a big discount.
Yeah.
And I think if you haven't taken advantage of that, I think that window's closing and it's closing really quickly. I do anticipate a lot more activity going into the spring market. I think with, the US elections, I think with what's happening with, Trudeau resigning or offering to resign once the new leader gets put into place. I think all this is going to add to the confidence of a market, especially with the lower rates and more affordability. And I think we're going to see a much stronger spring market moving forward. So if you haven't taken advantage, I just got a call from like a really old client of mine, and he moved from downtown to the suburbs, and now he's missing downtown. He wants to move back to a condo in downtown Toronto. And I told him, I said, listen, now is a great time. The condo market is experiencing significant difficulties, and you're in the driver's seat as the buyer, right? So if you're thinking about going back into downtown Toronto, like there's probably no better time than right now. Condos are on sale and they're not moving. There's a huge amount of inventory, and buyers are in control. So if you have the right agent, they can explain this to you. As a buyer or seller, you can take advantage of where we are in the cycle, knowing what's going to happen with interest rates coming down and the spring market coming, and Trump coming into office, and new leadership coming into Canada. I think that's going to go a long way to rebounding consumer confidence in Ontario. And we need it. We really, really need it.
Yeah, and you look at the timing of the last two decreases. It was late in the year, in a time when the real estate market generally goes quiet anyways.
Yes.
We go into our winter hibernation. It's
Yeah.
just the natural pattern, right? So the market's going to be quieter. But now people know, okay, the rates have come down. Spring market, no matter how quiet we are in January and then February, it always starts to pick up when we get into March and April. And this year I think will be no different. And now people have the benefit of those lower rates in their back pocket when they're looking to go out. So I think they'll be encouraged. I think some of them are waiting. And like you said, we're talking about, when is it a normal market? How many years were we, consecutive years, when we were in a market where there wasn't enough supply, right?
Yeah.
And now all of a sudden there's more supply than demand because the buyers weren't ready. But now there's good factors in the buyer's favor because the supply is there. They can feel like they're not going to overpay for a lot of these properties. They'll pay a reasonable fair market price for it, and they're still at affordable interest rates. Like rates where they are right now are pretty good. Even at the higher rates, 5%, those aren't 5, 6%, those aren't crazy interest rates for those of us that lived through 22% and thought it was a bargain to get 12%, way back, right?
They're not high, but I think when you factor them with the purchase price of properties, I think they become, the end result becomes high, which is the monthly payment becomes high, right? So I completely agree with you. When you look at through the lens of history at the interest rates, I think we're probably in a very balanced sort of area where interest rates are. But when you look at the purchase price and you look at the final result,
Right.
a $6,000 payment a month on $1 million mortgage at 5%, that's tough.
Yeah, because people want to live here,
Yeah.
right? They can buy a property in other parts of Canada for a lot less money, but they have to live there. So that's a tough question, for everybody. But prices are higher, and they're always going to be higher in the GTA because of the demand to be here.
Yeah.
So, but they got to figure it out. So I agree with you. Like everything I think is pointing to a really good spring market.
Yeah.
Um,
And
I
the
think what
last thought.
Trudeau did, I think what Trudeau did the other day, will throw a bit of a wrench into it for some because just because he put us in a
The
situation.
unknown,
Sorry.
the unknown.
Yeah, just where our government's not functioning. It hasn't functioned. They were on holidays. He was gone skiing in December. There was nothing happening in December, and now nothing's going to happen effectively until possibly May. Like no legislation being passed, no leadership, no government, nobody to negotiate with Trump. So that's going to create some uncertainty in the market, and we'll see how the markets react to that as well. So that's not helping it, but I still think there'll be a spring market like we normally experience. I think there'll be enough people out there, rates are low enough, and inflation's under control. Like the economic factors are there for us to have a good spring. I think like a normal good spring market in 2025. So I'm very optimistic that that's what we're going to happen. And then
Yeah.
once the new government gets established and they do all that, that'll give a little more confidence, I think, in the market overall. And I think I'm optimistic that it'll carry throughout the rest of the year.
Yeah, I completely agree. And the final thought I want to leave everybody on this is that if you haven't had the year that you want in 2024, that means that a lot of your contacts didn't buy and sell. That means that they're still there. And that
Right.
means that they're more likely to make a move in 2025. So
Right.
I think the glass is half full, not half empty. And I think if you had a really rough year in 2024, hang in there because I think you're going to be surprised how many people get the confidence to actually want to make a move now that we have a lower rate environment and that they held off not making a move in 2024. I think that's the biggest takeaway from this podcast is that if you didn't have a lot of business in 2024, then I think it's all those seeds are ready to hatch, and I think you're going to be surprised of how many people in your network reach out to you and are going to be wanting to make a move in 2025. So if you're not seeing it yet, hang in there because I have a feeling it's coming.
Yeah, I agree with you. And you as the realtor have the opportunity to explain that there's a real good opportunity for buyers right now out there. And and you go through all the stuff that we were just talking about, the economic factors, everything else, the supply that's available out there, the rates are down, and away you go. And that's why I agree with you. I think there's a lot of people that would have normally done transactions in 2024 that were on the fence. They're now going to get off the fence. So that's why I'm optimistic for 2025.
Yep. Yep, absolutely. I think it's going to be a great year for everybody. We're in the first week, but we look forward to what's coming, and we're going to be here every step of the way. Every week, we're going to be launching new episodes and talking to you guys and empowering you and bringing guest speakers, and it's going to be a great 2025. So we're going to spend it together. Send us your questions. We want to hear from you guys. We got some amazing emails over the holidays from a lot of you that were listening to the podcast and catching up on a lot of episodes. And David Korman, I shared a couple of the emails with you as well. So please keep them coming. We want to hear from you. Reach out to us. We're here. We're available. If you guys want any topics that you guys want us to discuss, we're open to any of those suggestions.
Yeah. Looking forward to a great year for everybody, 2025.
Thanks
Let's
for
do it.
joining us, guys. We'll see you guys next time.